Welcome back. Now, the big story over the last 36 hours has been on the microfinance industry. So the Microfinance Industry Network, we call it MFIN, has prescribed another set of stricter norms. So one of the key, provisions or, aspects is reducing the number of micro lenders per borrower from an existing 4 to 3. Now, these new measures will come into effect only from the 1st of January 2025, so there is sufficient time for regulated entities to implement the changes. But how will it hurt? How will it impact all these microfinance and stocks and companies? Sachin Gupta, Chief Rating Officer and Executive Director at CareEdge Rating, along with AM Karthik, Senior Vice President and Co-Group Head of the financial sector at ICRA, is now with us. And both these two gentlemen and their companies have actually downgraded their assessment on Fusion Finance. So ICRA has downgraded its rating on Fusion Finance, while CARE has placed the long-term bank facilities of Fusion Finance on watch with negative implications. So they pretty much singled out Fusion Finance as a company, which gets negatively impacted by these developments. Sachin, let me come with you. Why Fusion Finance? And tell us, what did your analysis throw up?
Hi, thanks. Thanks for having me here. As a rating agency, we continuously look at companies' performance, and it is not that we have singled out a particular company to kind of take a rating action. In general, we are clearly seeing a stress building up in the microfinance. In fact, we came out with a report last week where clearly we are saying that there is stress. And in fact, the recent guidelines which have come out, which you mentioned of MFIN, that will further exacerbate, at least in the medium term, the stress on the microfinance institutions.
Okay, all right. Thanks for your views, Sachin. Karthik, come in on this. If you can tell us how would these regulations impact the companies in the sector? And generally, how do you see this trend going forward? Do you think these regulations will help, or there's still much more pain left?
Hey, hi, good morning. These regulations on the long term is going to be very helpful. But in the medium term, we would expect some stress to flow through, both from a growth point of view. One, we would see an increased amount of rejections from an onboarding perspective. We would see slower growth. And our estimate is about 20-25% of the overall, microfinance loans are falling under this category of where they have more than 3 loans. So when you're talking about a 20-25%, that's a quite sizable number, where incremental credit flow to these borrowers are going to be slower than what it was in the past. So some of the weaker borrowers within this category, 20-25%, could slip forward. We are already seeing stress. The overdue in the sector is, as high as about 16%. When I say overdue, I'm talking about, one installment overdue and upwards. When you bring this additional constraint of not extending loans, it is possibly going to impact loan quality, at least in the near term. But it's a good step where one would see stronger underwriting, better quality borrowers coming through, and assessment being largely towards good quality customers thereon. So it's a good step in the long term.
So, Karthik, I take your point, sorry to interrupt. I take your point that these measures are positive over the longer term. But you said that 20-25% of the industry size, the borrowing that's currently there, is likely to get impacted. So what is the number that we are looking at in terms of rupees crore? That's point number one. And even in terms of gross NPAs, in the near term, asset quality, do you have any kind of analysis of, how much the gross NPAs could shoot up?
So we don't have a number outhand, but when I say 25% of the borrowers, there are about 8 crore borrowers in the microfinance space. So 2 crore borrowers are the ones where there is a likelihood of more than 3 loans being taken. The previous guideline, which was about 4%, 4 loans plus, that was about 13 to 15%. So when that goes up to 20-25%, so you're seeing an additional 10% of borrowers not possibly getting a, credit subsequent to this new MFIN guideline. In terms of quantum, it will be difficult to put a number, but the MFI sector overall is about 4.2, 4.3 lakh crore. So at 25% of that would be about a lakh crore or so. But not everything is going to be stressed. There are possibly only the weaker borrowers within this space. And since these regulations are coming in a very gradual and a graded fashion, we saw the first movement to 4 borrowers and 4 lenders and now to 3. So the impact will not be too high. We should not expect that all of this cohort of 2 crore borrowers or about 1 lakh crore is going to be stressed. But we would see an increased flow going forward because cash flow to these borrowers would be slower than what it was in the past.
Okay, all right. Sachin, comment on this. Do you think if it is a medium-term negative and this stress could continue, we could see some consolidation in the sector? And specifically on Fusion Micro, since there's been a downgrade by both the agencies, what's specifically making you very bearish on this name? What led to this downgrade out of all the lenders that we have seen?
Yeah, thanks. So, as Karthik mentioned, there is clearly a systemic stress across the space. And yes, the consolidation is a possibility. In fact, we believe that some of the entities, especially on the smaller side of the size of microfinance, they may not be able to get access to bank funding or even equity funding. And if that happens, they may have to reconsider their business models in terms of whether they really lend on the balance sheet or they maybe become more like agents to larger MFIs. The specifically coming to Fusion Microfinance, as I said, it is more of a sectoral thing. But yes, in particular, we are seeing high credit losses there, which is kind of clearly a factor which is impacting the rating. Also, because of these guidelines that have come out, in general, there will be increasing delinquencies in the next 1 or 2 quarters as well. Because you have to understand, that the typical borrower of MFI is, bottom of the pyramid. And once the disbursements from the whole system kind of come down, there will be less access of fresh funding to this segment. And therefore, people who are trying to really, take additional loans to, fulfill their existing loans, that option is not there. And that is, in fact, the intent of the whole MFI, and that they're trying to isolate the problem. They're not kind of giving more money to restrict or to improve their credit quality, but rather restricting the cash flows. And therefore, the delinquencies will go up. And with that, our outlook overall on the sector is negative. And yes, the consolidation is likely. One critical thing would be the access to capital. So because all these companies, when they are looking at high delinquencies, high provisioning, therefore high losses, therefore impact on the net worth, what we really have to see, the microfinance institutions who will be able to raise equity will be the ones who will be able to survive it better. If there is no access to fresh equity and limited access to bank funding, those entities could be facing a bigger challenge. Just since you mentioned Fusion, they have announced a rights issue, I think of about 550 crores. So that's a mitigating factor, even though the performance on the operating parameters was weak.
Karthik, one quick question. Is there a risk of downgrades for the other MFI companies like a Credit Access Grameen, Spandana Spurti, Muthoot Microfinance? Have you studied them? Do you track them? And is there a risk?
We track all entities on a regular basis. It will be difficult to talk about individual entities unless something we come out with a formal communication. But we are tracking the sector as a whole. We do understand there is stress, and as indicated, capital is something that we are looking out for. Entities with stronger capital are and relatively lower stress. I think the stress is going to be higher than what it was in the recent past. So it will be higher than what we have seen. But the question would be on the ability to, manage this stress and come out. So we would, see some entities wherever the leverage is higher to face increased stress, as indicated. Capital is something that we are closely looking out for. Entities do not need capital per se in the current scheme of things, but additional capital always is helpful and giving comfort to the lenders. So we are looking at all entities. We will possibly take a measured call in terms of which entity is, possibly going through a higher level of stress.
Okay, all right. So we'll watch out for those rating actions on different companies. But Sachin and Karthik, thank you so much for joining in today with your take on what's happening in the microfinance sector and the new regulations as well. Time for a short break now. We'll get you more on the markets on the other side and a lot more. Stay tuned.